My gosh, PayPal stock, Palantir stock, these stocks are on fire. PayPal's now up over 30% just in the past 3 months. PayPal crossing 78 today. It looks like it wants 80 plus very soon here. Congratulations to all bulls. This is what I call stage one of the green in regards to PayPal stock. A lot of folks are now up 20+% on the stock. I'm up about 25% so far in my PayPal shares, up $48,000. So congrats. This is stage one, folks. Palantir stock. I mean, we thought PayPal's move was big. Palantir's a whole other level. 62% in the past 3 months in regards to this one. I mean, think about this for a moment. Palantir has given you what people that invest in the S&P 500 usually hope for in a matter of years, like 5 years. Like if somebody invests in an index fund over 5 years with 62%, they'd be happy. Palantir has given you that in 3 months. 3 months, absolutely incredible. We are in stage 3 of the rally in regards to Palantir stock now at this point in time. This is up $162,000 for us now in the public count, up 330%. Look at that, 49K I put in the stock. It's now worth $211,000. This is the stage that we call it, you can't tell me nothing, right? Yep, we're in the can't tell me nothing stage in regards to Palantir, right? Now, if you wondered, what's stage 5? This is stage 5. That's when you are around that 10x stage. That's the call me daddy stage right there. And if you want to know the final stage, that's when you over 100x your money. So let's say you bought NVIDIA stock like, 8-10 years ago, you've over 100x your money. At that point in time, you start calling that person a master investor. You don't call them by their first name. You don't call them you call them master. You say master whoever it is at that point in time, okay? Or you can call them the legend. It's kind of like the military has rankings depending upon, how much you served, certain things, right? That's investing. You start referring, if you ever get 100x, you got to call them a master. You can't just call them a regular name at that point in time as another investor, man. That's just a whole different level. So, here we go, folks. First thing, we're discuss some Palantir news. There's some big recent contract wins here that have just come out here recently. I need to tell you guys about those contract wins. I think it's very important to discuss those. So we'll talk about that right out the front of this video. Then we'll talk about what do you do with Palantir and PayPal stock. This is a totally focused video just on PayPal and Palantir. What do you do with these stocks now? Do you keep buying them and say, you know what? People can say whatever they want. I know these stocks are beasting, but I'm going to keep buying them. I'm going to keep buying them. I'm going to keep buying them. I'm going to own every dang share in these stocks. Do you sell? Do you take profits in these stocks? Or do you just say, you know what? I'm not going to buy, I'm not going to sell, I'm just going to hold what I have. We're going to speak about all that in this video here today. Only 2 things I need from you guys. Smash a like on this video and make sure you're subscribed to this channel. If you're not subscribed, go ahead, look down there, see if you're subscribed to the channel. If you're not, make sure you're subscribed here to the channel. Appreciate y'all being here as always. If you're looking to access all my best course curriculums, teaching you exactly how I identify companies like PayPal, Palantir, Meta, Tesla, all these stocks that have been huge winners for me, Elf, right, Revolve. You can learn from me in depth by joining my private stock group, private wealth group. That will be pinned comment down there for access. And you also get access to our Palantir and PayPal community as well, which is 2 of my favorite communities in the Discord chat. I have the big Discord chat that's for everybody that's in the private stock group, private wealth group. And every day we're talking about PayPal in there, Palantir, all these other stocks, SoFi, Tesla. We're talking about all the news. We got big investor bases in all these different stocks. So always keeping up to date. So if you want to be part of a real community of these sorts of investors, you can join my private stock group and get access to not only myself, but all these other investors that we have that are part of these communities. We're talking about these stocks every single day. Once again, that's pinned comment down there. All right, guys, let's start going through this. Palantir, right off the bat, we got some big recent news in regards to this one. Here we go. So, this news just came out 2 weeks ago. Palantir and BP agreed to a 5-year strategic relationship with new AI capabilities. Palantir and BP have announced an enterprise agreement that will extend their strategic relationship to introduce new artificial intelligence capabilities with Palantir's AIP software. That's the new guy. That's the new toy out there. The new contract will build on a decade of deep collaboration that has created a firm foundation with BP's oil and gas production operations using Palantir's industry-leading software. Since 2014, a decade ago, Palantir's software has been deployed widely by BP to support its oil and gas production operations from oil or offshore oil platforms in the North Sea and Gulf of Mexico. Now, by the way, BP, one of the biggest oil and gas giants out there, if anybody's not aware. They're certainly kind of up there with Royal Dutch Shell, with Chevron, Exxon, those sorts of companies. They're giant. During that decade, it has supported BP's digital transformation program with a focus on delivering efficiencies in oil and gas production systems. Central to that program has been the development of a model-based digital twin of BP's oil and gas production activity, enabling performance improvements. This entails the integration of dynamic digital physical asset models with real-time data from over 2 million sensors into a single integrated operating picture through Palantir software. Palantir's AIP software will assist BP to safely and reliably harness large language models, LLMs, to improve and accelerate human decision-making with suggested courses of action based upon automated analysis of underlying data. This is massive, folks. Absolutely massive. And the reason being is this goes to show you how sticky Palantir can be. BP and them have had a relationship for a decade now, right? And so when you guys see them, and we're about to go through more recent contract wins here, including one that just came out here today, when you see this sort of stuff, you got to understand Palantir's business model is going to be incredibly sticky. So when they land a client, you're likely to keep that client for the next 10, 20, who knows, 30 years into the future. And so Palantir is going to be able to get more contract wins. And like I said, in regards to Palantir, if somebody spends, let's say they spend $100 million with Palantir over a 5-year span, right, which is $20 million a year, which might seem like a big number. For a large corporation, that's not a big number. Second, as long as Palantir helps them save or make an additional 20 plus million, it's all gravy. That's all gravy. So that's the thing you got to keep in mind in regards to Palantir and how they help these companies. This came out last week. Nebraska Medicine and Palantir announced pioneering partnership to use AI technology to advance healthcare. Palantir and Nebraska Medicine, a $2.5 billion academic health system based in Omaha, Nebraska, and a national leader in healthcare innovation, today announced a new multi-year, multi-million-dollar contract for Palantir's artificial intelligence platform, there's that AIP again, to help improve healthcare through transformational technology. Nebraska's medicine invests in driving innovation at a rate that most peers would deem impossible. Less than 1 year into the partnership, Nebraska Medicine has implemented more than 10 applications of AIP, improving patient basically throughput, expanding claims reimbursement, and better monitoring patient care. AIP provides Nebraska Medicine safe and secure awareness of their operations with long-term opportunities for transformation across Nebraska Medicine's enterprise and more. Palantir and Nebraska Medicine started working together in January 2024, so this is a somewhat new relationship, sharing a mission to rapidly solve critical healthcare problems. The proof: Nebraska Medicine represents Palantir's fastest time to enterprise commitment of any Palantir health system partner to date. In a series of targeted boot camps, Nebraska Medicine took less than 6 weeks to put a new workflow into production in as little as 90 minutes to introduce more. Since partnering with Palantir, Nebraska Medicine has seen a 2,000+% increase in discharge lounge utilization, freeing up beds earlier for patients and decreasing time from discharge order to patient discharge by 1 hour on average. This is massive. I mean, imagine how big Palantir could be really in the medical field alone. And when I talk about the medical field, I'm talking about drug discovery and all the things Palantir can do there. But I'm also talking about just the healthcare system in general in terms of like hospitals. If you've ever gone to a hospital, it's not a good experience. You know it's not a good experience, right? Why is it not a good experience? Because getting into the hospital, getting into the system is a hassle. Then when you want to leave the hospital, it's like, oh my gosh, it's like pulling teeth to get out of there. As somebody that's had 3 kids and been, in the hospital several times, with my wife, after getting out of the hospital, it takes a long time. You're just like waiting there and you're like, can we just go home? Can we go home? And hour by hour ticks along. And my kids were at all 3 different hospitals, right? And so I've seen many different hospitals. They're all the same. It takes forever to get out of these places. And it's like, oh my gosh, so much paperwork, so much crap. And next thing you know, you might be stuck there another day because they didn't get you out on time. And then they're like, at this point, we'll just keep them another day. And so they make some excuse to keep you an extra day. And it's like, oh my gosh, like we could have already been out of here so long ago. So we know the healthcare system in the United States needs a lot of fixing in a lot of places. And this opens up a 10 to 20 year massive opportunity for Palantir to really come in and be a game changer. And partnerships like this are we're just at the tip of the iceberg in regards to this sort of stuff. You're going to see Palantir, in my opinion, partnering with a lot of hospitals, healthcare related companies over the coming years. And the more proof they have of these sorts of things and the more this news gets around, the more it's going to help Palantir overall. This one came out a few days ago. Palantir expands Maven Smart System AI and ML capabilities to military services. Palantir today announced contract awarded, basically Army Research Laboratory, expanding Maven Smart System access across military services, including the Army, Air Force, Space Force, Navy, and U.S. Marine Corps. The firm fixed price contract is worth up to $99 million over 5 years and simplifies and expedites the ability for services to access the existing capabilities with Maven Smart System. Maven Smart System is part of, you guys can read through the rest if you want. The bottom line is Palantir is doing more and more of these big deals with government as well, with the military as well, which that's always kind of been their bread and butter of this business. But the commercial side is the side that's really exciting in my opinion. Now, these government deals, they really matter because they're big numbers. That's the thing with these. When you see a lot of these military deals, a lot of these government-related contracts come through, a lot of times they'll be like, a 9-figure deal, $100 million, if not several $100 million. And those really help that revenue and really help that bottom line for Palantir. But for me, that once again, it's kind of like tip of the iceberg type opportunity because you're only going to be able to get so much from the government, so much from the military. When you think about how big the commercial space is, I mean, oh my gosh, like Palantir, to me, the tip of the iceberg of this whole thing really is military and government, and the whole underside, that is commercial opportunity. So the commercial opportunity for Palantir, in my opinion, if we look at this company 10 to 15 years from now, it's going to dwarf any of this government-related deals. But we can't deny that in the short term, these military contracts and government in general related contracts are massive. And they do change the game for Palantir's revenues and their profitability. So we do have to admit that. Now, this news just came out here today. Palantir, some money from the National Institute of Health and Office of the Assistant to the Secretary. So supposedly this is about a $12 million 2-year deal, which, isn't the biggest deal in the world, but still. $12 million over 2 years. It just goes to show you, Palantir is really going after those $1 million, multi-million dollar deals. And just another one. So we got deals after deals after deals coming through with Palantir all the time. And it's very, very exciting. Now, additionally, how beautiful is this? This is looking at 1000xstocks.com, our new charts feature. Look at the trailing 12 month of Palantir's revenue. It's up and away. And then what we do on 1000x is we don't just show you the past. We do something pretty innovative that pretty much no one else does. We do the projected as well. So we show you what the projected Palantir numbers are based upon kind of what the analyst consensus is and kind of what they're thinking out there. And so what this shows you is the ultimate chart there. Like that's as good as it gets in the stock market, right? And keep in mind, this has all transpired during the highest rate environment we've had in decades. So my question to you is, what would Palantir's growth have been the past 2 or 3 years if we hadn't had the Fed raise interest rates so aggressively and we hadn't had the highest interest rate environment in decades? What would the growth rates have been for Palantir? What would they be right now? Like if we weren't in the highest rate environment in decades, like what would Palantir have grown last quarter? Instead of 27%, would it have been 37%? Would it have been 47%, 50%? Like I think that's a fair question, considering how much they've grown in this environment, right? That's incredible to think about that. I mean, think about the environment we're in. We're in an environment where some of the biggest, strongest companies in the world have had trouble growing revenues. Who comes to mind when I think about that? Apple, Starbucks, Nike, like all these great, great companies, like the creme de la cremes have had trouble even growing revenue over the past year because of how high rates have gone and the inflation cycle and everything like that. And here Palantir's putting up 27% growth, like it's nobody's business. That's incredible. But you want to know something even, in my opinion, more shocking and beautiful in this? It's if you go to the quarterly tab. So instead of trailing 12 month, type in, just hit the quarterly button there. And even that is up and away. And here's a question. How many companies can you count on growing every single quarter? Every single quarter. Not just, it's one thing to grow on a trailing 12-month basis. That's impressive. But what about every quarter? Where every quarter, it's just like, how much did we grow? How much did we grow? That's Palantir. Every quarter this company grows. That's incredible to think about that, right? So very few companies can do that. Now, additionally with Palantir, we've gone from net margins that were underground, right? Obviously, Palantir lost a lot of money for a long time. Now we're going to a beast. I mean, look at the net margins of this company's now approached a 20% level. And that's happened like snap of fingers. That's incredible. Gross margins on this company rate around 80%. So you got to think about where do if net margins have gone from underground to around a 20% level roughly this quickly, where are the net margins of this company 3 years from now, 5 years from now, 7 years from now, 10 years from now? That's my question to you. Here's what I think, okay? My opinion is, if we're thinking about the goalposts in my opinion, in terms of margins, Mr. Softy, Microsoft, and nvidia. Now, I gotta say, Palantir actually has two beautiful things that Microsoft and nvidia don't have. Microsoft margins are actually hurt because there's a huge segment of their business, which is cloud. That's through Azure, right? Now, cloud, very commoditized. You've got to understand that. Very commoditized, pricing's extremely aggressive. You know, they got to compete against Amazon, which is obviously a big dog in the space. They also have to compete against Google, which from my opinion, Google's extremely competitively priced with cloud because they're kind of third tier, so they can kind of a lot of times undercut contracts. And so Microsoft has this kind of more commoditized business that in my opinion hurts their margins substantially. I think Microsoft might have net margins of 40% plus if it wasn't for the cloud, in my opinion, actually pull down, right? NVIDIA's margins are incredible. 50% plus net margins, that's like unheard of. That's ridiculous. NVIDIA, guess what? They sell physical products. That's like the majority of the far away majority of NVIDIA's revenue is physical products. Palantir doesn't make physical products. Palantir is a software company. And so when I think about, could Palantir's net margins surpass a Microsoft and get to much, much, much higher levels than even a Microsoft or NVIDIA? It's a real possibility because they're so software heavy. So as you think about this business maturing over the next 5, 10 years, you got to understand there's so much room for expansion of the net margin of this company. It's ridiculous, absolutely ridiculous. And so what you're going to see is much more of the revenue growth go down to that bottom line nowadays than it would have certainly in past years. Now, the other beautiful thing is Palantir's already got gross margins above Microsoft. Microsoft's gross margin is 69%. NVIDIA's gross margin is 75%. Palantir's over 80%. So we're already, as far as gross margins go, we're already above those companies. Now, net margins, it's been increasing rapidly for Palantir, but we got a long way to go here. Look, just slightly under 20%. Microsoft's over 34%. NVIDIA's a shocking 55%. My opinion is, at the end of this decade, Palantir is going to be somewhere between, in my opinion, these two companies, 34 and 55% net margin, somewhere in there roughly. I don't know if it's like a 40% net margin for Palantir or 45%, but there's no doubt, looking at the gross margins of Palantir, thinking about how this company evolves, and also it's just software, there's no doubt in my mind that Palantir will end up becoming an incredible net margin company. And the best part for Palantir is they kind of have no competition. They're kind of a one of one, right? Their product is so specialized, their product is so phenomenal that you can't really put it in the same sentence as other guys. Once again, if we go to Microsoft and we really think about the cloud business, a lot of people look at that as commoditized. They say, okay, who cares? I won't go with Microsoft, I'll go with AWS. Okay, I won't go with AWS, I'll go with Google, right? Palantir doesn't have that. You can't just swap out Palantir and say, we got something else. No, it doesn't work like that. Palantir is a one-on-one, right? NVIDIA has gotten to these incredible net margins. Why? Well, because really they have no competition. Like Intel, AMD is the only companies really trying to keep up with them, right? You could say maybe Avago, Broadcom, what they're doing, but at the end of the day, all those companies are not really the best direct competitors to NVIDIA. And so NVIDIA has been able to command these unbelievable, historically ridiculous margins that just no one can really compete with, right? So the moral of the story is Palantir's net margin is going to go up considerably from here. Here's kind of how I would think about it. So let's imagine Palantir gets back to like a 30% revenue growth number. which I don't think is crazy to imagine they grow 30% 2025 to 2028, considering how much adoption of AIP is going out there. They're really starting to reach a scale of their customers telling stories to other customers. Their customers, at the end of the day, these are executives of companies. These folks go to other companies. The more these folks branch out and go to other companies, the more Palantir software is then going to be enabled into a new company, right? Imagine you're, I don't know, a high-ranking, let's say a top 5 executive of a company. You use Palantir. Then you go to another company that doesn't use Palantir. If you're a top 5 executive, there's a high probability, because Palantir's product's so phenomenal, you're going to tell the executives of that company, hey, we gotta adopt Palantir. We were spending $7 million at it over here at company XYZ before I came. It changed the game for us here, here, here. All of a sudden, the other executives say, yeah, we need to get that. Like, let's get Palantir in here. Let's see what they can do for our business. And so you start to reach this like beautiful scale of like help and help. That's one of the things that Salesforce has done over time. Like, how did Salesforce become such an absolute juggernaut? One of the most successful companies in the history of kind of B2B. Salesforce became so big because more and more companies adopted it. It was a good enough product in the market, right? And then those executives went to other companies and said, we got to use Salesforce. We need to bring in Salesforce CRM. And so they brought in Salesforce, and the other company brought in Salesforce, and it's just like this big network effect. And then all of a sudden now everybody uses Salesforce. Like literally, you go to basically almost any major Fortune 500 company, like Salesforce is going to be very commonplace for those companies. And so we could see a very similar phenomenon happen over the next decade with Palantir, where all of a sudden, if we fast forward 10 years from now, it's like, oh, you're a Fortune 500 company and you don't use Palantir? Like, what are you doing? Like, that's strange. Okay, well, why? So that's a beautiful thing here. So Palantir, could they get to 30% growth? They're at 27% right now. It's a possibility, right? So let's say they get to 30% growth over the next 4 years. So that puts them in 2028 right around $8 billion of revenue, just slightly under. Now, net income growth should way outstrip the revenue growth. So I wouldn't be surprised if they do like 50% net income growth, which then would put their net income margins in 2028 at 38%, right? Which, is it impossible to imagine 38% net income margins for Palantir in 2028? I don't think so. I don't think Alex Karp's going to go on some crazy hiring spree. I think he's going to run the company lean and mean over these coming years. And it's a software company. They're going to be able to build out to incredible profits. And also remember, this sales cycle has completely changed the game in regards to Palantir. The only bad thing you could really say about Palantir in the past was what? The sales cycle so long. It takes Palantir a year or 2 years to sell a customer, right? That used to be the old saying around Palantir. That's no longer. Palantir can give you demos and you could be sold on their product in a matter of days or weeks now. Not a year, not 2 years, not 6 months, right? That's a game changer. And guess what that helps with? Margins immensely. So instead of your salespeople having to go back and forth and all this consulting back and forth, it's a mess. You can just it's done, it's quick, you have a boot camp, you see, oh my gosh, this is changing the game for us, you get the relationship building, boom, massive opportunity for Palantir, right? So here's the deal. I think if we're talking about Palantir's growing 30% top line, 50% bottom line, with net income margins in the, we can call it mid to high 30s, Palantir will likely command somewhere between a 70 and a 90 PE. You might say, gosh, that's so high. Why so high, Jeremy? Why would it command such a high PE? Well, if they're growing their top line 30%, that is about a 6 or a 7x an average company. So if you're at a 70 PE, right, you're not actually that high. You're about 3.5 times the market in general, because market in general usually think about 20 PE ratio. Well, if Palantir has grown like 6, 7x the average company, but they're only 3.5x a PE, it would actually be an undervalue story if Palantir was at a 70, right? 90 on the high range. If you're growing net income at 50%, average companies are what, 5%ish in the SP 500? So you're about 4.5 times an average PE, but you're about, let's call it 10x an average company's net income growth. Okay. So when I have a 70 and 90 PE in 2028, if they're growing at those sorts of rates, that's not even a high number. That's actually, you could make a strong argument that that's a low number as far as that goes. So in that sort of situation, that would put Palantir in 2028 somewhere between $96 and $124, which gives you about a compounding annual growth rate on the low end and 26% on the high end, 34%, right? Now you can begin to also understand why getting back to this 30% revenue growth number is so vitally important. It is so vitally important. We get to that 30% plus number again, okay? If it's a 22%, let's say, revenue growth story, it's not nearly as exciting, right? Because then you need to bring down your net income growth numbers significantly. Then you need to bring down your PEs likely. And so then the compounding annual growth rates, and that's why I'm putting so much emphasis on in 2025 and beyond, we got to get back to 30% plus growth. We can do that. And this rocket ship ride for Palantir is going to continue on here, right? Now, this is the tough thing with Palantir, is at the end of the day, if you look at this company on a 2-year horizon, Palantir at 40 looks like a ripoff. It just does, right? That's the tough thing about Palantir stock. It looks like a ripoff if you're looking at this on a 2-year horizon. And the stock's at 40, which don't be surprised if it's 40 this week, right? It isn't a great value. It just isn't. But when you begin to look out further, let's say you got a 5 to 7 year time horizon, Palantir at 40 actually looks like a good deal. And so this is a screwy thing with Palantir, and this is why this stock causes so much debate, so much passion, because some people look at Palantir at $40 and they see a gem. They see, oh, this is a great deal. Other people look at Palantir at 40 and I'm like, are you kidding me? This stock's the biggest ripoff. Look at the PE ratios on this one, right? And I got to be honest with you guys, I can't say either side's wrong because both sides actually have a really good debate. Like, if somebody says Palantir is really overvalued right now, if you're looking at a 2-year horizon, they're not wrong. They're right. They're 100% right. Like, Palantir is at really high share price right now, right? If I'm looking at 2024 and 2025. But then if I look out and I'm looking further out, 2028, 2029, I'm like, oh, this is actually a good deal. So both sides are technically right in regards to the situation. It reminds me of Amazon. Amazon stock, the bears have always said in regards to Amazon stock, it's a ripoff. Amazon's a ripoff. Amazon's a ripoff, right? Why is Amazon a ripoff? Amazon's a ripoff because the stock always trades at extremely high P ratios. And so if you were a bear and you were saying Amazon stock's a ripoff for the last number of years, I can't say you were wrong. You were right. Yeah, sure. Amazon's a ripoff. But at the same time, Amazon stock's a deal. All the bulls have been saying for decades now. And those folks actually were more right than the bears, right? This is where it comes down to judging short-term versus judging long-term, a growth stock, and why it gets so difficult and why both sides actually are correct. I remember looking into Amazon stock. This was probably like 2010, 2011, sometime around then, right? Which is, I was still relatively young in the market because I started 08, 09. So, even 2010, 2011, I was still kind of a baby in the stock market, right? And I remember looking at Amazon stock back then. I remember looking at that stock and saying, I want to buy this stock so bad because my thought process was e-commerce is going to be much bigger, and I saw a future where everybody's ordering packages online and they just come to their door, right? And this is going to be this big thing. I wasn't even really thinking about AWS back then. I was just thinking about, Amazon's a future. This is if you could have bought Walmart stock back in the 70s, right? That's kind of the way I was thinking about Amazon back then. But I looked into Amazon and it traded at ridiculously high P ratios. And so I thought, the stock just looks overvalued, right? Because it trades at such high Ps. And I wasn't wrong, but I was wrong. Because at the end of the day, Amazon, although it traded at extremely high P ratios back then, it was actually a steal deal. Look at what Amazon stock was back in 2010, 2011 versus where Amazon stock is now. The stock easily has 10x or more over that period of time, right? And it's likely not even close. And so I was right and I was wrong in regards to kind of thinking about evaluation wise. And this is where growth stocks drive people crazy. Because a traditionally trained value investor could look at a growth stock and say, rip off. You're going to pay this sort of price. And somebody else says, that's it? That's all I have to pay? Right? And I wish I could have seen it from that perspective and really understood how to value growth stocks back then. But valuing growth stocks, very difficult, I can tell you that. Very difficult. Value stocks is cake. You could value Coca-Cola and Pepsi all day. That's so easy. Anybody could do that. Literally, I could teach somebody how to value invest in a matter of a few hours. Give me a few hours, I'll teach you how to value invest. Growth stock investing, the amount of videos I have in my course curriculums in the private group that go into that subject, it's a lot. Because to understand growth investing, you've got to fully understand value investing. And then you've got to be able to disconnect that and think in terms of the next 5 years for a company and where's a net income going over the next 5 years versus where it is now. And does paying today's price look like a deal based upon where that company is going 5 years from now? Now, if it looks like a deal based upon where that company is going over the next 5 years, you need to buy that stock. You need to buy that stock aggressively. If you can even look out 5 years and you're like, this doesn't look like a deal, I'm getting ripped off even on a 5-year basis, then you have to stay away from that stock and say, I'm not touching this, right? And I kind of almost think about it as like Manhattan real estate. Buying great growth companies. Buying great growth companies is like buying a piece of Manhattan real estate. And I could tell you any time in the past many decades, we could have looked at real estate in New York City and said, so overpriced, it's too expensive, it's a ripoff, right? At the end of the day, you've done pretty good with that real estate over time. And so like a piece of real estate in a great city, right? It's very similar to buying a growth stock. You kind of just got to understand it's likely going to be a lot more expensive 10 years from now than it is today. And you kind of got to get on board. Now, so here's my view on Palantir. If it's a buy, if it's a sell, if it's a hold, anything like that, and I'll tell you kind of what I'm thinking about in regards to my shares. My view on Palantir is if you have a 5 to 7 year horizon, Palantir today is a buy. But you got to have a very long-term horizon. You've got to be thinking years from now, not months from now, not a year from now. You've got to be thinking many years. And you have to be okay if you buy Palantir at 38 and it goes down to 32 over the next year. You have to be okay with that. You have to be okay if it goes from 38 where it's at now to a month from now it's 44 and then it drops to 32. You have to be okay with that. Knowing that you probably are banking that it's going to be $100 plus stock 5 years from now. No, it's a hold if somebody already has a position fully built. I would fit in that category. I already have my position built in Palantir. I feel very comfortable with what I have invested in the Patreon portfolio, the public account, right? Any other shares I have, I feel comfortable with that. My position's built. And so for me, it's just a hold. And all the money I make from the stock is like just happy camper, right? It's also a hold if somebody's really uncertain about 30% plus growth. I keep talking about this number because it's very important to the valuation models. If we grow at like 31% a year on average for the next 4 or 5 years, we're looking pretty dang good. If we're growing at like 22%, we're more questionable, a lot more questionable. This number is so important. So if you're uncertain and you're like, I think we've peaked in terms of growth rates, I think we're going down to like low 20s over the next year, then it's probably just a hold and it's probably not a buy, even if you have a multi-year time horizon. Now, the stock is a sell if somebody has 2 years or less of a horizon, because my opinion is Palantir will likely be priced somewhere between $30 and $50 for the next 2 years. And I would say that's a probable scenario. When I say a probable scenario, I'm saying like 70% scenario in my opinion. I think there's probably about a 70% probability Palantir's priced between 30 and 50 for the next 2 years. The only way I can see it going under 30 is some epic stock market crash. And when I say epic stock market crash, I'm talking like great financial crisis type epic crash. The only way I can see it going way over 50 over the next 2 years is we go way above those 30% plus growth rates. And so let's say all of a sudden we're doing like 40% revenue growth. Oh, we're going over 50 in that scenario. If we go over 40% revenue growth, like let's say this, because no one's really expecting that. Even bulls aren't expecting us to ever go to like 40% type revenue growth. If we had some freakish blow off top, and it's a possibility, right? I mean, I've owned a lot of stocks over time that went to way bigger growth rates, way faster. And I thought Tesla was one of those great examples, right? Elf was one of those examples. Those sorts of companies reach much faster growth rates than I had anticipated. And so if that happens, we're off to the races. But my opinion is we're likely stuck in the $30 to $50 range for the next 2 years, okay? That's the more probable scenario than anything else, than going under 30 or over 50. 2, it's also a sell if you think the company will only grow revenue 20-ish% and not in the 30s. If you're very convinced of that, then it probably makes sense to get out of Palantir somewhere around 40 or in the 40s nonetheless, okay? No, for me personally, right, once again, we're in stage 3 of this rally, I'm holding. And I'm perfectly fine. Like if this stock is stuck in the $30 to $50 range for, let's say, the next 2 years, I'm fine. I don't mind that, right? At the end of the day, when you own a truly great company, I explained to you before, it's like holding real estate. You just hold the dang thing. and you don't worry about trying to time in and out, and I'm going to get in, I'm going to get out, I'm going to get back in, you're likely going to cost yourself way more money doing stuff like that. You're likely going to cost yourself way more in taxes, way more stress, and likely produce worse results over time. So when you own a truly great company that has a great balance sheet, a great income statement, their margins are just getting better, their revenue's just going up quarter after quarter after quarter, the employee force is incredible, you hold it. You hold it. You don't worry about, I'm going to get out, I'm going to get back in, I'm going to get out, I'm going to get out. That's clown stuff, okay? So at least in my opinion, everybody can do whatever they want. I've been in this game for 16 years now, and I've done pretty dang well for myself. And what I do, it works. Like, you can't dispute it. The facts are the facts. The 5-year returns for the public account are ridiculous. And so, what I do works. And so, even if the stock is stuck 30, 50, fine. That's cool. I have no problems with that. No problems whatsoever. Say, well, what if you got back out, sold it right now, and then you went to another stock and then flipped it? No. It's not the way I play this game. It's not the way you would play real estate. You wouldn't have a great property in a great city and say, I got to get out of it. I got to get back in over here, and I'm going to buy this property right over here. I'm going to get out of this property in Newport Beach. I'm going to get into this property in Charlotte, North Carolina. And I'm going to get out of that, and I'm going to buy this property in Chicago. And then I'm going to get out of that, and I'm going to flip it over into this property over my... No, come on, man. Come on. Ridiculous, okay? So that's my opinion, and that's why I'm holding, right? Now, last question in regards to Palantir is, what's my price that... If somebody said, I'll give you this price for Palantir, you can't touch the stock for the next 2 to 3 years. You can't touch options on Palantir. You can't own the stock, anything like that. What is my price I would sell out today and be okay not owning Palantir for the next 2 to 3 years? Is it like $50? Is it $70? Is it $100, $200? It is right here, $100. If somebody gave me $100 a share for Palantir today, and they said I could not touch Palantir for the next 3 years, couldn't buy a share, couldn't buy any options, nothing in regards to Palantir, I would take 100 today. 50, I couldn't even consider. No. Even though I think it's a probable scenario for the next 2 years, we're 30 to 50, I still wouldn't take it. 70, I start to consider. We go 70 or higher, I start to at least consider. But $100 is that for sure price. If somebody gave me 100 and they said I couldn't touch a stock for 3 years, I would take $100 today. Which shows you there's a long way to kind of go here in regards to kind of my opinion on that, right? That's Palantir. PayPal. So we're in stage 1 of the green. The stage we're in right now is the stage that Palantir kind of went through at the end of 2022, 2023. This stage is what I call stage 1. It's the first rally. People start turning green on their shares they had been buying, right? And they start to say, oh my gosh, I'm actually profitable. I'm up 20-something% on the stock now, right? So imagine you were buying Palantir at $6, $7, $8 back in 2022, and then by part of the first half. Remember when Palantir made that first move from kind of that $6, $7, $8 range and made that first move above 10, right? Do you guys remember that? That was stage 1 of the rally, and people started turning green on Palantir. Next thing you know, a lot of people were up 20-30%. And they're like, oh my gosh, I'm actually profitable on Palantir. Wow, what a good feeling. That's what PayPal is going through now. We've got this first stage. Everybody's excited. A lot of people are starting to turn green on the stock. Of course, if people held the stock from the 2021 days, they're down so much, it's ridiculous. But I think a lot of those people, I'll be honest with you guys, I think a lot of those people are gone out of the stock now. I think they sold a long time ago. I think they sold back in 22, 23, or even the beginning of this year. I don't think there's a lot of those bag holders. I don't think there's a lot of them left anymore at this point in time. So I think there's actually a lot of people, because Palantir is now at the highest it's been in probably about 18 months, if not longer than that. I think there's a lot of people that are actually, like me, they're profitable now in the stock. They're up either 10, 20, 30%, something like that. So we're stage 1 of the green in regards to this. Now, I covered on the Reaction channel. It didn't get a lot of views, unfortunately, but I covered all the recent news in regards to PayPal on the Reaction channel. So if you didn't get to see that and you care about PayPal stock, definitely check that video out, because there's actually been a lot of recent news in regards to PayPal. Okay. Now, the great thing with PayPal is, since we're in stage 1 of the rally, we don't have valuation problems in the stock at all. There's no valuation problems at all in regards to this one, right? You start to run into valuation issues in regards to stock when you reach stage 3 of a bull run. right? That's when that happens, not in stage one. If we look at PayPal's forward P, it's around 17, Square's at around 20, Visa's at around 28. We have no valuation problem here at all. In stage two, we also won't have so when PayPal makes its next move from like, let's say 80 up to 100, up to 120, we still won't have a valuation problem in regards to PayPal. It might go into the 20s forward P, but that's just kind of like fair value. Once we do stage three of the bull run, that's when you at least start to have to talk about like valuation. Does this make sense? Those sorts of things. So the beautiful thing with PayPal, we don't have to worry about any of that right now. It's just up, up and away. It's so awesome, right? Now, the thing I'm starting to consider is next year's revenue growth. So analysts are around 8% revenue growth expected for next year. And I think that's a safe assumption, very, very safe assumption for 8% revenue growth for 2025 for PayPal. But the more I'm seeing what's going on with PayPal's business model, the more I saw last quarter's numbers, there's a decent probability here, though that number is way too low. No one's expecting this company really to grow double digits next year, okay? But I got to be honest with you guys, I think we might actually have a chance to grow double digits next year, which would be shocking. Because everybody's kind of banking on PayPal just being in that 7 to 8% revenue growth. And if we come through with a 10, 11, 12% revenue growth number, you want to talk about shock the world. That's going to be shock the world, because then all of a sudden people are going to start talking about PayPal's a double-digit revenue grower again. And that's going to change completely the valuation, how you have to value it. I mean, if all of a sudden we start talking about double-digit revenue growth again, even if it's low double-digit, 10, 11, 12%, we're going over 100 quick. I mean, very, very quick in regards to this one. Now, why do I feel like this might be low? Here's why. Reason number one, inflation. Inflation has stopped hammering the consumer, right? And so we're at this place now where I'm expecting real wages to actually uptick considerably over the next 12 months. Inflation is not going to hammer people for the next 12 months. And so therefore, I think we could see a pickup in goods spending in 2025. Because here's the deal. If we have an unemployment rate under 5%, let's say that employment market stays good. We have an unemployment rate under 5%. Wages will still have to go up. They're still going to be in a good place. They're not going to be like out of control, but I think they'll be in a pretty dang good place. Because at the end of the day, employers, they need jobs. They need to, have a workforce out there. So here we are. We're in a place where unemployment rate's under 5%. Wages are good in terms of wage growth. And inflation is the lowest it's been in years and years and years. That sets a consumer up very good for 2025. If additionally, in terms of people paying on debt, that goes down, that also sets up people very well. And so that's why I think there's actually a decent chance that we could see a nice uptick in goods spending in 2025. And that basically helps any company that sells products out there. I don't care if you sell shoes, I don't care if you sell smartphones or computers or video games, that helps everybody out. And I think there's a pretty good probability of that actually in 2025 when we see a goods uptick in spending, which would be phenomenal. That's going to bode very well for a company like PayPal. They're one of the most direct beneficiaries of goods spending, right? If I think about the most direct beneficiaries of people spending more money, I think about PayPal, I think about Visa, right? The ones that are running the transactions. I think about even like American Express. I think about these two stocks that I own, Shopify, Amazon. They're going to be direct beneficiaries as well if we ever see actually goods spending uptick in 2025. And I think it's a realistic possibility, right? Reason number two that I think maybe the growth might be a lot better than people expect in 25 is this man right here, Alex Chris. He's Mr. Pedal to the Metal. I mean, he is doing an incredible job. And there was a great conference he did. This was a couple weeks ago. I don't know how many of you guys even saw this. Goldman Sachs conference. There was a lot of great KPI talking about key performance indicators of what they're seeing in the business model. Definitely check that out if you haven't checked that out. And when I see the innovation that's happening at PayPal and the partnerships they're creating there, they're moving much more quickly than I thought they were going to move. Like I thought, this Alex Chris, he's going to be, do a good job for the company, but it's going to be like a multi-year effort. He's only been at the company for like a year or less than a year. And the amount of stuff I'm seeing there, the partnerships, the innovation, I'm like, oh my gosh, like they're changing the game quick here. Imagine where this company's going to be a year from now. I mean, that's crazy to think about that, right? Additionally, they're starting to run those Will Ferrell ads. If you watch any NFL football over the weekend, I'm sure you saw a million of those Will Ferrell ads all over the place, advertising PayPal. My thought is they're going to spend big on marketing the next 60 to 90 days, which is going to help likely customer acquisition. And it's likely going to help PayPal spend. And it's going to likely attract a lot more customers to their debit card product as well. And maybe even their credit card related products as well, right? Now, I got to say, they can afford some big marketing spend. Big marketing spend. They really can. And the reason being, this looks at trailing 12-month here on 1000x of PayPal, right? I mean, it's just up in terms of their revenue. That's not going to stop anytime soon, in my opinion. That's just going to continue to go up. And so if I think about a company that can afford big marketing spend, it's PayPal. Here's the deal. This looks at their free cash flow. I mean, their free cash flow is flying for this company, right? The free cash flow yield is flying for this company. So when I think about, I mean, they're literally at all-time highs in regards to free cash flow yield. Their free cash flow is ridiculous right now. So given that this company is so incredibly profitable, they're going to be able to continue to run ads very aggressive and continue to take market share. When you continue to spend like that, you're actually going to attract more revenue growth. And the more revenue growth, and Alex Chrisley, like I said, he brought out so many great points in that Goldman Sachs conference. One of them he was talking about is the rewards that people are using is for a lot of these PayPal rewards through a debit card product and different products, is they're actually using on fuel and in food stores. And what he says is those aren't two traditional places you would think about even using PayPal. Never. You usually think about buying something online. So he's talking about like PayPal is going from just being an online, I'm going to buy something online, to they're expanding that opportunity, the TAM there. But additionally, like real world, like physical locations, like going and using PayPal, tap to pay. That's phenomenal. So imagine how this builds out over the next 3, 5, 7 years. And could we get back to double-digit revenue growth? It's a possibility. Visa's done it for a long dang time, right? So PayPal, is PayPal still a buy? The answer is yes, absolutely. PayPal's a buy all the way to 120. After 120, it begins to be a hold. If we're thinking about just kind of short term in regards to this. In terms of PayPal, you know, the way I kind of think about it is it's not as risky as like a SoFi or a Coinbase, right? SoFi always has risk. I'm a SoFi shareholder, but it has risk. It's a bank. There's always the risk when you own a bank of bankruptcy, like what if they give a bunch of bad loans, big recession, blah, blah, blah. So it's not as risky as like a SoFi or a Coinbase. Coinbase has a lot of risk in regards to what happens to Bitcoin price. But it's also not as boring as like owning a traditional financial, like a Wells Fargo, a JP Morgan, or a Bank of America, or something like that. So it's kind of that happy medium of risk reward there, right? Which is very, very attractive. All right, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to access my Palantir community, my PayPal community, SoFi, Tesla, all those sorts of communities, pin comment down there, apply to join my private stock group, private wealth group, get access to all my best course curriculums, teaching you everything I got up here, as well as, and we also get exclusive videos, plus to get to see the moves I make each week, the stocks I'm buying and selling in my $2.4 million plus Fidelity account. Much love and have a great day.